Insurers are seeking a way to make money from your climate change travel anxiety. Insurance models are being upended by extreme weather. Whether it's wildfires or tropical storms, disasters linked to climate change are becoming more common and creating upheaval in how insurers make money, and the losses they may be on the line to absorb. Property insurers are pulling out of states where the risk can't justify the potential return. States are bailing out their insurance sectors and the government is getting more anxious about the situation. But one insurance niche is getting a boost amid the chaos. More travel and disrupted travel plans have meant more interest in travel insurance, which covers trip cancellation, lost luggage and delays. The baseline of normal has changed significantly, said Jeff Rolander, Vice President of Claims at Fay Travel Insurance. Rolander, who has been in the insurance industry for over 30 years, said a decade ago, there'd be a couple of large hurricanes per season. 5 or 6 years ago, the hurricanes would happen more closely together. Now, storms are on the horizon quite frequently, and it's a matter of severity, not if it will hit. There's more than just anecdotal evidence. The actuary's climate index, which measures the frequency of extreme weather, temperature, precipitation, dry days, sea level, extreme wind, shows warming temperatures in North America in recent decades, fewer cool or cold temperatures, higher sea levels, more heavy precipitation and more drought. More travelers seeking out trip insurance. Consumers are reacting to increasingly extreme and unpredictable natural disasters by more often opting into travel insurance. According to SquareMouth.com, a travel insurance quoting and comparison engine, the travel insurance market has grown significantly since 2020, when travel came to a halt. It now exceeds pre-pandemic levels, with SquareMouth reporting a 410% increase in sales compared to 2020, with the magnitude of that annual jump no surprise given the COVID standstill, but also a 126% increase compared to 2019. Part of the reason for the trend is pandemic-linked. Travelers have been spending more on revenge trips after feeling locked up for a few years. And during a period of high inflation, the average trip is more expensive, 15% more expensive this year than in 2020. But increased delays due to extreme weather are also contributing to the growth. People used to just kind of jump into a trip, and now they're watching the hurricanes very closely, said Zach Latsari, owner of Cross Border Coverage, which provides auto insurance to U.S. and Canadian vehicles driving to Mexico. More natural disasters mean big losses for insurers, and more costs passed along to policyholders. In 2022, natural disasters resulted in global economic losses of $275 billion, according to Swiss Re. Of that amount, $125 billion was covered by insurance, marking the second straight year where insured losses from natural catastrophes exceeded $100 billion. Over the past 3 decades, there has been a 5% to 7% average annual increase in insured losses, according to Swiss Re. The insurance industry is amongst the first to be affected by climate change. As a whole, the industry is trying to figure out what to do, said Mike Newman, Chief Operating Officer at Parhelion Underwriting, a risk finance company that insures investments in clean energy, climate finance and the environmental commodity markets. The disruption to travel creates challenges and opportunities for travel insurance providers and the insurance industry in general. In many ways, it's a wait-and-see moment, Newman said. When risks and the number of claims rise, insurance companies typically react by putting down restrictions or limitations and raising prices, and that's already happening in some areas of insurance. In states where regulators are pushing to cap premiums to reasonable levels on property insurance, insurance companies are simply leaving or not offering things like wildfire or flood insurance.